Well, the conversations continue here at Davos 2023, and I'm joined by Mahindra's Anish Shah. Anish, many thanks for joining us. And to start with, congratulations. You've just been elected chairman of the BEF Automotive Council. Let me start by asking you about that. What is the priority as far as the global auto industry is concerned? There's been several challenges, of course, supply chain constraints, which impacted Mahindra as well back home. But outside of that, what's on the agenda?
So, Shireen, first, it's a pleasure to be here with you back in snow-filled Davos.
On a very cold day.
On a very cold day as well. And thank you for the best wishes. The Automotive Governance Council is one that has leaders in automotive from around the world. And our priorities are essentially threefold. First is on sustainability. Second is with regard to supply chain, trying to ensure that we can get some sanity on that front. And third is with regard to the future. How does software impact automotive going forward? Should there be standards around it? How do we make it easier for consumers? So those are the three areas we focused on.
Let's talk about demand. And I want to understand both from a domestic point of view, but also from a global market perspective. What's the indication that you're getting in terms of demand?
For us, it's been outstanding. We've had multiple strong launches, and the demand continues to be at a very high level. Our challenge is to get capacity in faster. So we are halfway through doubling capacity as we had promised, and we will complete the other half in the next 12 months.
In the next 12 months, you hope to get that done. On the EV front, you've opened bookings for the XUV400. You hope to start deliveries. You've, of course, got a plan of delivering 20,000 for the year. But what's the plan on that front in terms of capacity addition?
So bookings open on 26 January, and we will be adding capacity for electric as well, because beyond the XUV400, we will have more SUVs that will be launched starting end of next year. So that will be after a little bit of a lag, but we have 5 SUVs coming up at that point. So our goal is to give our consumers the best cars in electric SUVs.
What's the response that you expect? I mean, you can only do 20,000 because that's what you're factoring in. But with the pricing that's been announced, what's the response that you're getting so far?
We will wait and see. Again, the response has been very good from consumers, but we've just come off Scorpio, which was 100,000 units in 30 minutes. That was a global automotive record. So that's going to be a very tough one to beat. But we will do that eventually in electric as we go forward. My sense is the first set of consumers will be ones who are early movers, faster to being green, and we will need more charging infrastructure before electric opens up in a much bigger way.
I want to talk about the regulatory environment as well, because you've got a lot of new norms coming in, the CAFE 2 norms. There are norms that impact the diesel portfolio as well. And then, of course, the possibility of subsidies being done away with for electric vehicles if FAME 2 doesn't get an extension. What does the regulatory environment look like? How uncertain is it? How are you dealing with it? What is it going to mean in terms of impact on margins?
So first, from an intention standpoint, we see the government with the right intentions, which is help the transition to electric. We do feel that the subsidies will be there to ensure that transition goes smoothly, and we don't see any major challenges to that as of now, at least. With regard to other norms that are coming in, some of them are required. We need safety norms, we need better emission norms, and that's something that we've always been a leader in, so that doesn't worry us on that front.
Okay. On the electric mobility side, you've talked about a 10,000 crore rupee investment plan. Can you split that up for us in terms of how much of that is going to be on manufacturing, how much of that is actually going to go into R&D, etc.? What is the breakup?
So no specific numbers on that as yet, but over the next few months, we will be putting that out, and we will have to invest a little more than that as we go beyond this year. So again, those numbers will put out.
A little more than that means what?
We will look at what to do on the battery side, for example. Does it make sense for us to indigenize with partners? We have Volkswagen as a partner, and we're going to be working with them on batteries. So we will look at potential partnerships on that front. So some of those decisions are still pending. For now, we have what we need.
How serious is the battery plan for you?
It comes down to almost anything that you would look at for an electric vehicle or any vehicle. What do you make versus what do you have others make? For example, in our cars today, we don't make many of the components that come in. Our suppliers do that. And eventually for electric, that will be the case as well. So that's what we've got to think through, saying what's essential, because our suppliers have great credibility and skill sets, and we will often leverage them. In the case of battery, we may decide to go down the path of, again, partnering with Volkswagen and someone else to set something up ourselves. Or if we find the right supplier combination for it, we will go with them as well. So no decisions on that as yet. Stay tuned. We'll let you know.
How close are you to being able to make a decision on this front?
It's still a little way off. So this is not imminent right at this point.
It's not imminent at this point. I want to understand in terms of rural demand at this point in time, and that impacts, of course, the tractor business. How's that shaping up for you?
Much better than we expected. December was an outstanding month. We had a 30% growth in tractor sales in December. So the year actually is trending much better than we expected. And that, I think, is a testament to agri-income and the fact that the crop cycles have gone very well. So we are seeing at least the agri side of rural be a lot more buoyant than we had initially expected now.
Okay. You've identified 7 gems, so to speak. Which gem today gives you the most confidence?
I'd say today all 7 do, because these are great businesses with tremendous growth potential. Some of them we would look at a 10x growth in the next decade, and they're all positioned very well in their industries. Our quest now is to look for more gems and go beyond the 7. But at least these 7 are on a very good
Which
track.
are the areas that you're scouting in?
We're looking at some of our current businesses, whether we can take certain elements from there and grow them much faster. Farm machinery is one such example. But for us, the qualification for a gem is $1 billion of market cap in 3 to 5 years. So we're looking for more ideas to do that.
That can get to that run rate.
That can get to that run rate. I can share that recently at our annual leaders meeting, we had a challenge for all our businesses to come up with business plans that we would fund. The condition for that is a minimum investment you can ask for is 1,000 crores.
Okay.
And we've got some good outcomes from there. We will go through them and take those forward as well.
Okay. Give me some idea of the kind of ideas that have been put on the table through that challenge that you're interested in taking forward.
So one was farm machinery, and they've got a great plan to grow multifold. Second was taking auto international in a much bigger way. With the success we're seeing in India, we should be able to go international in a much bigger way.
Okay. So largely within the existing sectors, adjacencies associated with those.
Yes, because those are quickest to growth right now. So for us, we've been very methodical in terms of how we've approached it. We started with capital allocation. Then we went to our 4 large businesses, getting them on a very strong momentum. Then our growth gems. And now we're looking at beyond our growth gems, how can we take strengths that we have in our current businesses and create bigger businesses from there.
When we spoke, not May, but before that, you'd laid out a roadmap as far as where you wanted the group to be, and it was a key priority for you that on all metrics, especially financial metrics, the group should do much more. Are you satisfied with where you are today, and how much work needs to be done?
So we had committed to 18% ROE in 3 to 5 years. We got there in 18 months. We had committed to a 15 to 20% growth in EPS annually. We've actually delivered a few multiples of that right now. We've committed to our growth gems, reaching $1 billion. They're on track at this point in time, so we should be able to get there. So far, we've delivered our commitments. We've got a lot more work to do, though.
What kind of work are you now? What's the work in progress at this point in time?
The work in progress is to scale up. I mean, for that, first, it's about the mindset to look at that opportunity, to change the way we do things, to take more risks, to find a different business model in certain cases. Because we have, as I said before, businesses that have very good potential. And it is a very different mindset now when we think about how do we get to 10x from where we are.
I want to specifically talk to you about what's happening at Mahindra Finance, because this is an issue that we had spoken of as well. Where are things on that journey that you had mapped out for it?
So things have been going extremely well. I would say we are halfway through the turnaround. We started with looking at asset quality and ensuring that we don't get back to high NPAs in any economic downturn. We are on a very good path there. Gross NPAs are close to 6%, net NPAs are close to 3%, and we will continue to do better on that front. We've got technology and data being used in a much bigger way, a number of new business areas that we've gotten into, and feeling very good about where that business is. It's one that I think has amongst the largest potential for us for growth and for value creation.
And succession?
Succession will happen. We've announced that Ramesh will be retiring, as is our group policy, and the board is fully involved. And we will find the right candidate.
For a business which, as you point out, has a significant amount of potential from where it currently is, in terms of succession, you said that you will look for the right candidate. But what is the kind of transition period, the handholding period that you're looking at, if any at all?
We will have a reasonable handholding period, which may range from, I would say, 6 to 9 months, which should be sufficient for the new person to come in. And
so which means that we should have an announcement within the next few months.
Ramesh retires in April 2024.
Yeah.
So yes, in the next few months we will have an announcement, and then the person will come on board. So
and
we've got a good set of businesses there.
Unlocking value for shareholders at any point in any of these businesses?
So the first 3 are listed already.
Yeah.
Solar, we will be on a path to IPO once we achieve the scale that we want, and some of our other growth gems as well. We will go on a path to IPO in the next 2 to 4 years.
2 to 4 years. That's not very far out.
That's not very far out, yes.
Well, what do you make of the way that the markets are behaving at this point in time? There's been, the Indian stock market's been fairly resilient, even in the fact that we've seen global volatility. And also we're in an era of high interest rates. The expectation or the hope at this point in time is that we are getting closer to a pause. What's the sense that you get?
Well, if I were to look at it first from a Mahindra standpoint, our investors and markets have been kind to us. We've seen significant value creation in the last year. Beyond that, I will leave it to the experts to opine on the market.
But interest rates and the impact that is likely to have on business and sales and demand, if any, at this point in time, it doesn't seem to have had any impact.
My sense is there will be some impact. India is not going to be immune from the rest of the world. India is going to be better positioned because we saw quick action. We saw interest rates going up on a very proactive basis. So therefore, inflation hasn't picked up as much as it has in Western economies. And therefore, we'll see some impact, but not to the level that we may see in Western economies. On balance, I think India will do very well and come out of this nicely.
Thanks very much for joining us here in Davos. We wish you the very best of luck with your new appointment as well.
Thank you, Shireen.
We are going to take a break, but the conversations continue here at Davos 2023. Don't go anywhere. We're back in a minute with more.